Beverage company geared towards selling to restaurants. Our expert judges, Angela Lee, founder of 37 Angels, Peter Shankman of Shankman Honig, and Hilary Mason of Axel Partners. So I'm going to start with you, Angela. Did you hear in the pitch that made sense? What didn't make sense?
Yeah, so my main question is really around the revenue model, and you're targeting businesses. And my question is, companies like Coke and Pepsi pay restaurants to be there because they see that as a marketing channel for their consumer business. Voss Water, when they started, same thing, we're paying hotels and nightclubs to be there. And so I just want to understand why the go-to-market strategy of targeting the businesses as your end customer.
Right. So the reason that we're going after restaurants rather than grocery stores is there's less competition. If you think about a grocery store, there are 250 bottled drinks in a grocery store, whereas at a restaurant, there aren't as many options. So from a competitive perspective, it's much more attractive as the entrepreneur. In addition to that, that's where we think the real need is.
But I think what Angela is saying is if you're not paying the restaurants outright, why would they use your products when it's easier and cheaper for them to get other ones?
I mean, good question. So Coke and Pepsi really only do that for larger customers. We find a ton of smaller emerging restaurant concepts that aren't going to be getting that treatment and who are really interested in an alternative beverage.
Okay. And I don't know if I could ask more questions, which is in terms of stickiness, do you guys have any data either from your own data around repeat business or just in terms of industry trends? How sticky are these relationships from a defensibility standpoint?
Yeah, I mean, I started the business 2 years ago. All of the customers that we started with, we still have, and as they open new restaurants, we're included in those plans. So for us, it's been very, very sticky.
Peter, your thoughts?
You know, I want to get excited about this because I love disruptors. I've built my life on disruptor companies, things like that. The issue I have, it sounds like a lot of hustle and a lot of work for what eventually could be reward. But right now, I mean, you're looking at, you told me earlier, 30 restaurants in 2 years.
Right.
You know, which is a lot of work for 30 restaurants.
Right.
You know, you walk up down 6th Avenue, 57,000 restaurants in a 4-block radius. It seems like, especially with the bigger players paying to be there, it seems like a lot of work for just a little bit of payoff. And I don't know, you know, until you start really getting numbers up, I worry about that in terms of, you know, what you're replacing. We go into a restaurant, Coke, Diet Coke, Pepsi, Diet Pepsi, water, milk, juice. You know, they're always there, and it seems like you're looking at a really, really hard uphill battle.
So Philip, what are your profit margins? I mean, what's a win for you?
Yeah, I mean, our margins in the store, we target 40 to 50% gross margin, which is pretty attractive. I mean, in terms of your question, I think what is really nice about our approach is that although the sales cycle is long getting into restaurants, once we're in, it's a really great opportunity for us. You know, we do high volumes, the margins are pretty good, there are much lower selling costs than there are in grocery stores. So we don't need to be in 3,000 grocery stores in order to make this business work. We need to be in a couple of hundred. So
the user mentality states they go after things that they know, and you know, you order a Coke, you know, down in the South, every beverage is called a Coke, you know, and so I worry about that. I worry about the small numbers in terms of people looking at it and saying, I don't recognize this. It's a mentality issue.
Sure.
Hilary, your big tech take?
So I actually do have a question about your process and how you got here. And I sort of love this because every kid running their lemonade stand is dreaming that they're going to grow up and they're going to do it as a real business. And so what is your plan for world domination lemonade stand look like? And what is your product development process? Like, how do we know this is good?
Yeah. So I started this business with the insight that there was a pain. Within the restaurant industry, not a lot of beverage innovation. I started off with a couple of products and just went out and hit the streets and started to create relationships with restaurant owners and understand what the real need was, what the real product mix was, and we're still developing that. Cup and Compass is the first brand that I launched. It's a line of organic juices and teas. We're launching a new soda line this summer based on feedback that we've gotten from our customers. So I guess my goal is to create a portfolio of brands and products that we can take to market and go to any restaurant that has a beverage program, which would be any restaurant, and offer them something, whether it's a premium add-on, whether it's really providing them the foundation of their beverage program. So I guess for me, it's having a portfolio of products that are on trend, that are exciting, and that we can sell to any restaurant.
Philip, when do you make money, though? I mean, so 30 restaurants, you say you need to get to 300. It took you 2 years to get 30. I mean, what kind of acceleration? Are you going to accelerate faster than what we understand right now?
We hope to be operationally break even by the end of this year. goal is to get to 100 restaurants. We're in 30 currently. We think that's achievable. So obviously, if we want to grow the business, that will require more cash. We have to build more products, and that requires us to put money up front. But in terms of breaking even, we're hoping to be cash flow positive by the end of this year.
All right, so quick lightning round here. Angela, yes or no, would you introduce Philip to your investing partners?
I would introduce Philip to, I think, some cool partners for you. Like one of our portfolio companies is Clutch Club. They do sampling for health and wellness products, and this would be a great distribution channel and a great test channel for you. I think in terms of introductions to investors, it feels a little bit early. I want a little bit more data, a little bit of a broader suite of products.
I'm in the same boat. I have a couple of advisors that I think you should probably talk to. One who's was with the Snapple Beverage Group for 20 years, who could tell you some really interesting horror stories. I'd like to see that growth a little bit more in terms of getting other people on board who might have had some more experience in this first. And then we'll see what happens.
Hilary, before I let you weigh in on this lightning round, I'm just curious, are you concerned at all about the lack of data feedback, as basically both Angela and Peter are alluding to?
Yeah, and how do you know what flavors to choose and which ones will be successful? Is that based on, interviewing a few people? Is it based on gathering data from a lot of people? I think there's an interesting opportunity for you there.
Yeah.
So, Hilary, would you introduce to partners, or would you wait?
I would, but I would also want to see the data.
And what's your take on that, Philip, on the feedback?
We've already raised money, so I think that makes sense. And frankly, we're looking to raise debt financing later this summer, so not looking to raise cash through selling equity. With that said, I would love any introductions that you have. I really appreciate it.
All right. You were kind enough to bring us drinks, so that always gets things going. We are going to have that. Philip, thank you. Thank you very much, Angela, Peter, and Hilary. We have a quick break to take. We are back in just 2 minutes with more on Risk and Reward.